Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. As always, every Friday, I do a weekly recap and a look ahead to the next week or so in the precious metals market. This video is being recorded on Friday afternoon, March 28th, 2025. We are already a week into spring. Heck of a week this past week for precious metals. Gold up over 2%. Gold, I believe gold futures closed the week around 3,100. Silver closed just below 35. Silver futures, that is, up over 3% on the week. GDXJ, similar gains, but there's a fly in the ointment, and that is the action the last couple days in the silver stocks. And I've been warning about the market being a little too hot or a little too overbought, so I think the odds are high. We could be near a short-term peak and things could just cool off a little bit as spring starts. So let's look at the charts. Let's discuss it. So starting off here, we have a great overview of the market. These are daily candle charts for the last 2 months. Gold here. This is gold against foreign currencies using ETFs. So this is basically the gold price without the impact of a weak dollar. Silver here, you can see GDX, GDXJ, SLVR, which I think is a better ETF than SIL or SILJ, but so that's why I'm using it. Still have SIL here for the larger silver stocks. Here's the stock market. Here's bonds. So bonds had a big rally. Stock market dumped today. Okay, so what's the issue the last few days? So here's silver. We can see here. And by the way, stock charts, they changed their, you can see gold here and silver. They changed their data provider in the last week. So as far as futures, these prices are a little bit off. This should be about 50 or 70 cents higher. This, I believe, gold closed above 3,100. So they changed the data and it's kind of messed up the chart. So I apologize for that. But the larger point is, look at this. So this is a higher high for silver. But look at the silver stocks. That's bad. Where's SIL? That's bad. So we have this nasty sell-off today in the silver stocks. Yesterday on Thursday, huge day in silver. I believe silver closed above 35. Again, this data feed is messed up. But I would have expected better performance out of the silver stocks yesterday. And so today was pretty nasty. I mean, that's SLVR, I think, which is more juniors. This is the large silver stocks. So again, that is a lower low. That's a lower low, but silver made a higher high. So that's concerning. The gold stocks, not as concerning. Higher high here. They did make a higher high, although barely, and we have a negative candle. Like these are bearish reversal candles in gold and silver. And so, of course, silver was down today and gold was up nicely. So putting it all together, it's just the odds are maybe in the last day or two, we made a short-term peak in the sector. Nothing to be worried about. Nothing goes straight up. But that's my biggest takeaway at the end of the week. But let's get into the charts some more. Other charts, I should say. So here we have the gold optics from Sentiment Trader, similar to public opinion indicators. The blue is daily data. I believe this is green. Like, look, I'm colorblind, so I don't like the moving average color here. But this is a 50-day average here. And I put this line here to kind of show extremes when the 50-day average of public opinion gets to this level, pretty close to 80%. And we can see, if we zoom in, looking at, like, for example, here is an extreme reading based on the 50-day moving average. So the market made a little correction there. Also here, this was more of a correction. I think lasted a few more months. You go back to the 04, 07 period, you had longer corrections. So this right here coincided with that 06 peak. A little before, you had a reading, extreme reading, but that was in the middle of a huge move higher. So over here, you also see some extremes. So this doesn't tell you exactly what the market will do, but we've had this breakout and this huge run, and this is at an extreme level right now. So that's just telling us to be cautious. Now, stepping away from the caution, very big picture over the next 12, 18 months, there's still some serious risk of a real accelerated move in gold and precious metals. And that what we have seen in the last 12 months, maybe that's just the first leg of this really really bullish accelerated move to the upside. But saying that, we will need at some point, whether it begins now or in a couple months or 4 or 5 months, we're going to need to see a 10, 12, maybe even a 15% pullback, depending on how high gold goes at some point, to set up the market for this big leg higher, this leg higher like this, or even like this, if it does something more like this. No, we're going to need to see that pullback. And so where we are right now, we're following the averages here, but we have not seen more, I think, than a 7 or 8% pullback. Maybe we can move a little higher, 3,300, 3,500, 3,200, something like that. Maybe we can do that before we have a 10, 12, maybe even a 15% pullback. So all I am saying is that pullback would be a really good thing. It would set the market up and put it in position to surge higher. And maybe it'll just be a sideways consolidation. So if we see the market go sideways like this for 3 or 4 months, that can set up a move like that. So again, there's nuance here. You can be bearish and cautious over the next couple months, while still over the next 6, 12, 18 months being super bullish. Okay, let's get into some of the candle charts. So daily candles here. Here's gold as usual with the 150, 200-day. Here's silver. I've talked about gold coming back and testing the 200-day moving average at some point. Gold is now, so again, this data feed is not entirely correct. Let's call it 3,100. This is at 2640. So this is a 200-day here. Maybe this gets to 2750. Maybe this gets to 2800. This should get to 2800 sometime in May. So focused on that as support. Looking at the daily chart, this is going to be the key support level on the daily chart. Right here, 2850, 2900. Of course, you also have this here, 2750. So this here, if gold is going to make or begin a sustained pullback, these are the levels that I would look for as support over the next month or two. Now, silver, again, this data feed is off. This is up to 35 here, but it's pulled back. So this is perfectly fine. I mean, I would love to see this pull back for a couple months. Then you have a cup and handle. Like this would be a cup here, correct for a couple months. What would that be? So 35 down to about 28, 29, 641. So that's 41 and a half measured upside target. So I would love to see this pull back and consolidate. Test the 200-day moving average right here, just below 31. So that's where we are for silver. The weekly, I don't want to say a lot about this. I actually love how the silver weekly line chart looks. Again, how good would this look if you have a bullish consolidation here for 2, 3, 4 months, setting up an explosive move into the 40s? There's that. Now looking at gold here, I mean, this is really looking like it's almost going parabolic. So you had this correction here, even a small correction here. Now it's shooting higher, closed at the highs of the week. So this is almost too strong. Bullish, but too strong. And again, silver. So this, based on the new data feed, this should be a little higher, but still 35 is resistance. So getting into the next chart for silver. So we're doing this on Friday. Obviously, Monday is the close, not only the close of the month, but the close of the quarter. So you only get quarterly closes 4 times a year. So it's a great day for technicians. This all-time monthly high here, not all-time monthly high. Well, the monthly high close here in 1980, this is about 3560, 3562. If you look at 35 here, the market came down in the middle of its crash, came down, hard rebound at 35. Then it fell through. Then it rebounded 1, 2, 3 times where 35 is resistance. So this is a monthly line chart. So every piece of data here is the monthly close, the monthly closing price. So that's what we're seeing here. 35. This is huge for silver. 35. I'll say it again. 35 is huge for silver. When we get a monthly close about 35 and the market's pulling away from 35 to 37, that's when silver will begin to lead gold. And that's when, all your random silver stocks are probably going to start rising. Doesn't mean I favor buying those right now. I still want to focus on quality. So that's it on silver, monthly and quarterly close. Key. I'll have a lot to say about that on Monday. So yes, looking at the metals, we could start to cool off. We could have an interim peak, short-term correction. But, and this is something I talked about last week, you look at the stocks here, all these indices, they're breaking out of 4.5-month bases. Here's GDX, here's XAU, here's GOEX, here's GDXJ. So we could have a short-term correction. It's perfectly fine that the miners could correct a little bit. They might correct a little bit. They could go sideways for a month or two. It's not going to negate the breakout. But based on these breakouts, that's why, for those of you investing in miners and juniors, we don't want to get bearish or get too concerned with what's happening at this point if we get the correction in the metals. I mean, based on these breakouts, I don't see that much downside. Doesn't mean that goes for every single stock, but it's just important to keep that in mind. I don't see some big rug pull coming. And before I get to the last chart, if you do own miners and juniors, I would urge you to consider subscribing to the Daily Gold Premium. We're all about finding the best companies that have the highest upside. What are the highest quality juniors and larger juniors that have 5x, 10x upside in this real bull market over the next couple of years? That's what we're focused on. And folks, there's still time to buy quality. The quality stocks have moved a lot, but they haven't quite run too far yet. And I'm really hoping that we have a little correction here over the next couple of months, because that can reset and give people a chance to buy the high quality juniors before they double again or go up another 50%. Because at that point, then they'll be a little too extended. So if we do get that correction, this is a time to reset your portfolio. Move some stocks out and buy better ones, move those in. It's always important to periodically tweak your portfolio. So those of you who are subscribers, thank you so much. I appreciate you and your business. Those of you who are not and you own stocks, you own miners or juniors, I would urge you to consider our service. We'd love to have you come aboard. And with that, let's wrap things up here with a short-term chart. So if the sector puts in a short-term peak and is going to correct a little bit, what are some levels that we should look at as far as GDX, GDXJ, and SILJ? So these are daily candle charts. And so looking at GDX here, GDX almost hit 47 today, closed here, 45, 47. Looking at the support levels, this is probably low 40s would be a target. So we have lines here of 41, 42. So this is an area that could be a downside target. Now, with respect to GDXJ, closed at 56.85, and that has come down to, that could come down to, let's look here, 52.5. That's going to be an important support level. If it goes below that, maybe 50, 51. And look at the 200-day moving averages, 38.20. So these are not, the 200 days are not that extended. So these could come down and correct 10%, or definitely 10% from these peaks. And they're not that far above the 200-day moving averages. SILJ silver juniors, not looking that great. That's why you have to be a stock picker, buy the best silver juniors. Don't just buy anything because you think silver's going up. And on that note, that's it for this video. Hope you all had a great week. Thank you so much for tuning in. Leave a comment. Let me know what you think. Love to read your comments. And I hope you have a great weekend ahead. And I'll talk to you guys again in the next video.